Hello and welcome to this Newgate Communications webinar. I'm Adie and I'm chairing the event for today. We've got around 100 people in the audience and a fantastic panel of speakers, so hopefully this should be a really interesting and informative debate. A couple of quick housekeeping points. We will be running some poll questions throughout this, so please do share your thoughts with one another and with the panel. We're going to try and keep this to around 40 minutes for the discussion, and then 20 minutes Q&A afterwards. So please do share your questions using the buttons at the bottom of your screen, and we will try as hard as we can to get through as many as we possibly can. So a reminder, the topic for discussion today is, will COVID-19 spark an ethical business revolution to build back better? So I mean, clearly over the last few months, it has been incredibly challenging for all of us. Unfortunately, it has been much more challenging for some than for others. And as we now look through lockdown, we also look down the barrel of the worst recession for 600 years. We've seen GDP fall by more than 20% in April, and arguably a lot worse to come still. So as we look forward to a brave new world, what is the purpose of business? Has it been reset, and is the purpose of business now to make money, save jobs, pay taxes and fuel recovery? Or does business still have a higher ethical purpose? Is the purpose of what business does still as important? And if it is, what does business do about it today? So to answer those questions, we have four expert speakers. We have May Jaramillo, who is Head of Sustainable and Impact Banking Europe for Barclays Investment Bank, where she advises purpose-led companies on corporate strategy and fundraising, and she helps large caps design and execute ESG strategy. We also have Richard Burrett, who has spent 35 years in international banking. He is the Chief Sustainability Officer and Investment Committee member at Earth Capital, which is a global investment group which manages more than 1.6 billion in sustainable and impact private markets investments. He's also a fellow of the University of Cambridge Institute for Sustainability Leadership. And we have Garfunkel. He is the co-owner and managing director at Junction Strategy, which is a consultancy that works with entrepreneurs and intrapreneurs, that is, change makers within business, to increase their organisation's positive impact. He's also a UK B Corp ambassador, and he sits on the B Lab UK Regional Standards Advisory Group. And we have Emma Kane. She is Chief Executive at Newgate Communications and has more than 30 years experience advising organisations on corporate strategy and communications, and she is a strong advocate for social purpose in business. She's also chair of the Barbican Centre Trust, chair of Target Ovarian Cancer, and a trustee of the Nightingale Hammerson. So without further ado, let's move through to the debate. And the first question we wanted to ask is, do you think that COVID-19 will spark an ethical business revolution to build back better, as many people hope? Or in reality, are we just going to go back to business as usual? May, I wondered if I could start by asking you that question.
Sure, thank you, Andrew. I do believe fundamentally that this is an opportunity that we are all going to take, and mainly reflecting on my own personal experience during lockdown. We all had an opportunity to look in the mirror and assess how we were living life, how we were going to work, how our work days were taking place, how we were interacting with our families also got affected. And in the back of that, then there is the list of products and services that we were using, that we were purchasing when we went to the shop. So all that very, very simple list of things that we were going through on a daily basis, I think have been reassessed during lockdown. And I find it very difficult to believe that it will not amend the way we see things, the way we consume products, and the way we interact with our colleagues, with our communities. So I do believe that this is an opportunity that we are all going to take and amend how we run our businesses, how we provide services, and how we consume products. And that would then put pressure on the larger corporates so that they also reassess the same things that as individuals we are doing. So I think the collective is really building up.
And Adam, what's your view on that?
Yeah, I mean, I think, will it spark a revolution? Will we go back to business as usual? You know, inevitably, it's going to be a bit of both, I think. I mean, I think there is inevitably going to be a draw back to things that seem familiar. But what's really interesting, I think, is that I'm not sure people want that. I I mean, to build on what May's saying, there are surveys out there that show that only 6% of the British public want to return to business as usual, if you like, as it was before. That's a tiny, tiny figure. So I think, as May suggests, it's been a moment of reflection for all of us as individuals and as business leaders, and people who work in business, to think, well, you know, the good old world wasn't so good after all. Maybe there's a better way of doing things. I'm also been encouraged by the number of calls for a green recovery that we've seen around the UK, around Europe, in North America. We've got investors calling for it. We've got you know, hundreds of businesses signing letters in support of that kind of thinking. And so I do think there's pressure building on the government, and I think that's where we have to pause for a moment, because I'm not entirely sure that the government wants to see a green recovery in the way that people are calling for. I don't see enough action and enough commitment to that agenda to give me a strong sense of confidence that we're going to have this ethical business revolution, to quote the question. But yes, there is a huge groundswell of desire for it, I think.
Richard, would you agree?
Yeah, I'll pick up on that point of groundswell. I was reading a survey in City AM which suggested that 2/3 of people in the UK wanted a green recovery. So I think that has popular appeal, but I do think there will be pressure on the government to go back to business as usual. But it seems crazy to rebuild things that were broken before COVID started. So we'd be wasting the opportunity if we did that. There was a really good article a month or so ago in The Economist by Mark Carney, who talked about how this may cause us to reassess what we value, also in financial terms. And I was fascinated to read that Zoom, a month or so ago, had a market capitalization greater than the 7 largest airline companies globally. So, I mean, this is already affecting the way we financially value businesses. And I'm sure that is not going to, you know, revert to its original historical mean when this is hopefully over.
And Emma, what's your view?
Well, a revolution suggests a sort of radical, transformative change, and I think that, no pun intended, that the climate has changed. Whether it's going to be an evolution or a revolution is to be seen, but change was already afoot, and I think this is certainly going to accelerate it. It's brought the S in the ESG to the fore. So I think now, you know, there's been a heavy focus. There's a heavy focus on sustainability pre-COVID. Now, business, in society, philanthropy and diversity, and governance are in the spotlight. I think that for me, the difference now is that the pressure's coming not just from activists, but it's coming from, you know, the whole range of stakeholders. That pressure's coming from investors, business, politicians, and society. Investors are certainly pushing for it, and I think activists and activist investors are now using it as a sort of precision-tipped weapon to go in and attack companies with. Boohoo certainly will be feeling the effect of not getting it right, being splashed over the front pages today, because, you know, being a good business is good for business, and people, particularly the younger generations, are looking to work for ethically and socially conscious businesses. So I think now, you know, this drive that's coming, the force to have real change is really coming to the fore. And I think, you know, pre-COVID-19, with Fortune 500 CEOs, only 7% believe that companies should mainly focus on making profits and not be distracted by social goals. I mean, it seems extraordinary to me that it was 7%. But, you know, the FT has recently speculated that the ESG considerations may mean that dividends are not going to be reinstated as rapidly after lockdown, because of that sort of the widest range of stakeholder needs need to be looked at. So, I mean, certainly the sort of financial stimulus being given by the Chancellor will help stimulate this. The PM's been sort of talking about you know, the need for us to sort of build back greener and a more beautiful Britain. You know, society as a whole is recognising the benefits. I think we've all loved having cleaner air and so on, but there are still some countries that are looking to up emissions and invest in coal to fuel their recovery. So I think continual vigilance is needed. Hopefully, I don't think we'll be going back to business as usual, because I think there's been a sort of reset button has been pushed on the world as we knew it. But hopefully, you know, this is the opportunity that's really, you know, there's a sense really now that there is change.
Just thinking about sort of pressing that reset button, I mean, you know, how important do you think 2020 is going to be within this sort of wider ESG, you know, conscious capitalism movement? I mean, are we going to look as the year that everything changed, or you know, is it just going to be another milestone on a very long journey? I wondered, Adam, if I could put that to you first.
Thank you, Andrew. I do think it could well be seen as that. I mean, not least because we all came into this decade, those of us in the sort of sustainable business movement, thinking of this as the decade of delivery for the Sustainable Development Goals. And there is, you know, something, I mean, you know, to make perhaps a slightly pedestrian point, there's something about 2020 and all those business vision statements that were written for 2020 that we didn't expect the world to look like this, but all of them have to get rewritten and project forward. And I do think there's something in that sort of, that sense of we're embarking on a new decade here, and this has been such a moment of global reflection and pause that it does feel like that reset, to use Emma's word. You know, businesses have absolutely had to focus on continuity, on survival, but then they've also taken a deep, hard look at themselves, and things are different than they were before. People are shopping in different ways. You know, the companies are being more agile and responding. I mean, my local news agents became a greengrocers within days of COVID-19 coming on strong. And I think the pressures to do things differently are ramping up. I think it is worth mentioning, though, that this doesn't come out of nowhere, right? So if I look back, in the US, the Business Roundtable of 200 large businesses last August restated the purpose of the corporation to say it's not just about putting shareholders first, it's about thinking about all stakeholders. So this agenda of thinking about the purpose of business as a wider, broader agenda has been building for some time. It's a fairly mainstream group of businesses that made that declaration. If we look at the B Corp community, for which I'm a proud owner of a B Corp and an ambassador for the movement, it was doubling in interest in the early months of 2019. The number of people and number of businesses that were looking at assessing their performance against the B Corp framework more than doubled in the first 9 months of 2019. And we've seen lots of growth in the B Corp community in the UK during the pandemic. So yes, it's not coming out of nowhere, but it is going to be accelerated through this amazing experience that we've all had.
Richard, I wonder if I could ask you your views on that.
Yeah, look, I share the view that to use that hackneyed expression, we were already on a journey, and clearly this has really disrupted it. I mean, so many people have commented on the the clean air in towns, the fall in emissions, and I mean these are really positive things. But it's worth reflecting. I saw a study that suggested that even at the peak of emissions reduction during COVID, emissions only fell 17%. And yet, at the same time, it felt as if we were closing down the whole global economy. We were staying at home. We were trying to work remotely. Certain industries just had to close down totally. So in a way, I think this sort of evidences what a challenge we've got now to go to a net zero economy by 2050 or earlier. And we have to do that without trashing the economy. So I think if we use this as a point of reflection as we move towards COP26 early in 2021, I mean, this is a great time to think about what would that transition look like, and how can we actually do it in a way that also addresses so many of the other issues that have become apparent as we've sat at home and enjoyed these digital lives for the last 3 months. So I'm optimistic that this will be a reflection point, and we desperately need an acceleration because, frankly, you know, our movement, our momentum along the sort of sustainability journey wasn't strong enough.
May, can I ask your views?
Sure. So I think 2020 is going to be, I agree with a year of reflection. But if I go back and really look at pre-COVID, what was really driving and very broadly using the term ESG, and it was effectively societal pressure. We had quasi-regulatory pressure, and in the back of that, you then had that investor push really accelerating in 2015 and beyond. COVID comes, and there is a slight slowdown, but you are already seeing a catch-up in the back of that. But what started in the last recession that really accelerated in 2015 was a very long journey. So whilst I do think that 2020 is a catalyst, this is still part of an extremely complex journey. And when you really think about the acceleration that is required to avoid a disorderly transition, we need GDP growth. And we're about to start some challenging times as a result of what happened. So I think a catalyst for good things, but this is still part of a very large journey of education. We sit in Europe, ESG, 10% of global funds are ESG, just 10%, which is good relative to where we were 3 years ago, where we were anywhere between 3 and 5%, but 60% of those funds are in Europe. So what do we do with the rest? From an emissions perspective, we are still not the big chunk. Now, you do have the Business Roundtable movement in the US. You now have the Department of Labor talking about ESG investing. So some people would think it's positive, others think it's negative, but at least we're having the conversation. So there are those very positive moves, but I do feel that it is still, I liked how you framed it, Andrew, around the journey. I think it's part of that very long journey.
And Emma, I was going to ask your views as well.
Yeah, I mean, I think we are at a pivotal moment. There's growing pressure for the Build Back Better, and we either step up and make the change, or it's definitely, we go backwards. And the year began with intense pressure for environmental change, and now I think the role of businesses in supporting their staff and communities has come to the fore. I mean, the Black Lives Matter protests have demonstrated the need for systemic change and for equality and diversity. I think in terms of the UK government, I mean, the Conservative Party has been a sort of champion of, or has a philosophy of responsible capitalism. And so it sits well with that and how markets can help deliver the solutions to climate change and other major social challenges. So I think new rules, for example, have been put in place of pension funds to disclose how they have considered ESG factors in their investments, and these sort of things are really important in making this change happen and making people see ESG factors as an investment and not a cost. And so I think that 2020 has pushed forward the ESG agenda quite significantly, but it's raised a number of questions really on what exactly constitutes being socially responsible and ethical. So I think the environmental issues are almost universally understood, but I think some of the social issues, such as tackling racial inequality and injustice, there's widespread agreement that there's something needs to be done, but how it's going to be tackled is going to be really important. And I think in terms of there's an interesting recent example in terms of the controversy around HSBC and Standard Chartered publicly supporting China's new security law in Hong Kong. And, you know, there's now considerable debate among the investment and asset management community about whether investment in those banks is consistent with ESG guidelines. So I think, you know, it's really, I think this whole sort of 2020, there's a real sense that it is going to me to shape and accelerate a broader purpose now.
I mean, thinking about shaping and forming that broader purpose, I mean, do you think business is showing the right type of leadership in delivering a wider social agenda? And can we actually trust business to lead the march to this more conscious form of capitalism? Emma, I wondered if I could put that to you first.
Sure. Sorry, I was just answering the poll that came up. Yeah, I mean, I think the key here is leadership. And to deliver real and lasting change, it has to be a conscious decision. So, you know, there is a big difference between businesses with great leadership who can be trusted and those who can't. But I think, you know, it certainly can't be a bumper sticker in the annual report saying we love ESG initiatives. But bad leadership is being outed. So, you know, with the Black Lives Matter protest and a movement, there we've seen businesses who've decided just like to sort of get on social media and sort of say they embrace what's happening, and then having looked at themselves first, they're being outed. So I think, you know, it's going to make businesses sit up and realize that, you know, it has to be on the top of their agenda. I mean, I think that every company should have their values on the front of their board packs, because, you know, to succeed in as a business, you have to think about all your stakeholders, and you have to look at things through the lens of those values. And I think if you don't, you're not viable in the long term. And it was interesting, the whole sort of very well-known Larry Fink BlackRock letter that he wrote on this point, but there was some controversy too, because people were saying, you know, it's fine to berate others about being sort of stewards of investors' capital, but you have to look at what you yourself are doing. So, you know, authenticity is everything, but I think businesses are beginning to realise this. Millennials are going to make up 75% of the workforce by 2025, according to a report by PwC. Millennials certainly want to work for businesses that are socially responsible. And so I think whether business like it or not, they can be trusted, because it's becoming increasingly obvious that, you know, it is the only way that they are going to survive in, to use the bad phrase, but, you know, this new normal, or this new world that we are now living in. But at the end of the day, businesses are going to be led by their customers and shareholders, and they are demanding change.
Adam, what's your views on leadership and business, whether we can trust them?
Yeah, listen, there are definitely some good signs of strong leadership in the business community. I'm particularly struck by some of the work that Emmanuel Faber has been doing at Danone, big exemplar in the B Corp communities. They've committed recently, they had committed to making all of their businesses B Corps by 2030. And then about a week or so ago, they became the first French business to sign up to this new entreprise à mission, this mission-led business form in France. And at the same time, brought forward their deadline to make all their subsidiaries B Corps by 5 years to 2025. And he's very clearly signaling that we have a clear purpose, you know, to provide health through good food and so on. And we will commit to making that real. And you'll be able to measure and assess how we're doing, because we're going to make all our companies B Corps. We're going to have all of that information in the public domain. And I think, interestingly, on the question of trust, he set up a mission committee that's independent to review how well Danone does in sticking to those principles. So within business, within those leading businesses, they recognize that, yes, you know, you can commit to these initiatives, but you need someone to hold your feet to the fire. And I think we can't trust businesses not, you know, to avoid that kind of scrutiny. They need they need that in place. And that has to come partially from these independent committees and advisory boards and so on, but absolutely also has to come from civil society and from government. There's a role for all sectors in the community here. But of course, in terms of business needing to do something, absolutely. Are there signs that it's happening? Yes. Is there enough? Not yet, not for me.
May, can I put that question to you as well?
I agree with Adam that there are good signs. I probably feel a little bit more optimistic than Adam because there is awareness. There is demands from employees. There is demand from your consumers and clients. There is demands from the families of the C-suite as their Generation Z children are asking their parents what they are doing at work. And one of the oil and gas companies, their CEO is very vocal about the demands that his daughter has on him. And I think that resonates with us. So there is that very broad stakeholder demand on our leaders to come out and at least acknowledge that we have to review what we have been doing because it's just not working for the collective anymore. To me, that's very positive. That is the beginning of the change. I do agree with Adam that when it comes to building the evidence, there are probably some cases better than others. If you look at the list of the top CEOs, the last list, if you look at the top 3 names, you will see something very common between these individuals, and one of them, Iberdrola. I was just actually looking up to make sure I got the name right, and he came up with this concept that I'm a big fan ever since I heard him talk about it, and it's a social dividend, right? Corporates have focused continuously on shareholder returns. In the form of dividend or any product that they have used. But this concept that Iberdrola CEO came up with, a social dividend, to me is a fantastic, it brings us all at the understanding of what he means, that corporates have a duty of making sure that they generate returns to society. So I feel optimistic. There is more work to do. But across the whole sector, spectrum of sectors, I'll speak for investment banks. You see us doing things we hadn't done. We have impact banking teams, not the ESG team that is looking after our performance, but teams like my team that are responsible for generating returns from businesses that are playing in the green economy, circular economy that didn't exist 5 years ago. And that's a sign that our CEOs are investing in these areas. So I feel a little bit more optimistic. We're not there yet, but yeah, I do think that we're on the right track and feel optimistic about it all.
Thank you. And Richard, can I ask your views as well?
Yes, it was interesting May mentioned this idea of a social dividend. I mean, at Earth Capital, we developed a tool called the Earth Dividend, where we try to actually calculate the impact of the businesses that we are investing in from a whole host of perspectives. And I think that you can demonstrate leadership as a business by talking a good story, but what we really have to do is then evidence that we're delivering that through good quality disclosure. And I think that is something that businesses are beginning to do, but clearly need to do better. I mean, if you look at the Edelman Trust Barometer, it's pretty clear that broadly people in the street do not trust business. And when it comes to investment bankers and former bankers like myself, I mean, we're not trusted either. So the only way that we can actually regain trust from the business world, I think, is to demonstrate credibly that we are doing what we claim that we're doing. And I agree with Adam. I mean, one thing we do at Earth Capital is we go through our analysis of the businesses, and then we get that process externally assured by a third party to just demonstrate that we are doing what it says on the tin. And I think this whole disclosure of TCFD around climate change and disclosure around levels of women in senior positions in your organizations and different forms of equality will become much more prevalent, and is certainly needed, because I think to regain trust, we need to prove that we're doing what we claim to be doing.
We wanted to move on now to look at the role of investors, because obviously a lot of investors made quite a lot of capital out of their role in agitating for change and championing ESG and being stewards for capital. But also investors are also culpable for chasing short-term returns. So how do you think investors need to strike the right balance? And possibly a slightly separate question, but you know, do the rest of us all have to accept that we're going to see lower returns as a result of this ESG movement? I wonder if I could put that first to you, Richard.
I'll answer the latter question. No, we do not have to accept lower returns, and it's not just me saying that. There's a whole host of both academic and industry research from BlackRock and others, MSCI, that demonstrates that companies that perform well in ESG terms perform well financially. So there is no trade-off, in my view. If you do ESG badly, there may well be a trade-off, but if you do it well in a systematic way, you should achieve outperformance. Look, the investor sector is not a homogeneous group of asset owners and asset managers, and I mean there are some who I think have embraced ESG because they see they have enlightened self-interest and they see that it can add value to their portfolios. I think if you then look at this sort of idea of impact investing, I mean, we're seeing a huge uptake in impact investing too, which is encouraging, but still it's at relatively low levels relative to the broader investment community. I think based on 2019 data, I think Gin indicated that there was something like $500 billion of impact funds under management. If you look at the hundreds of trillions of dollars that are invested in the global economy, then clearly that's a rounding error. Even PRI's membership has, I think, over $80 trillion of assets under management. And we have to put a question mark next to that, because it doesn't feel to me that we're living in a world with $80+ trillion of investment made in a socially responsible, sustainable way. So clearly they may well be members, but we're not genuinely implementing that. So I guess it's a slightly muddled answer. No, there's no need for a trade-off in financial return. If you do sustainable investment well, if you integrate sustainability into your business well, there's every evidence that it will make your cash flow stronger, your business more resilient, you will manage risks better, you will be open to a wider group of investors, and as a result, you will typically attract a lower cost of capital and therefore will have higher valuations. And even during the COVID crisis and the sharp falls in the stock market, there have already been studies that evidence that ESG funds actually outperform non-ESG funds in that period. And secondly, the flow of funds into ESG funds has actually increased during that period, which is quite encouraging.
Yeah, definitely. May, can I ask your views as well?
Sure. I'm sorry, the question popped up again on the survey. I am going to tackle the answer in slightly a different way. And by no means do I mean accepting lower returns, but ESG as a framework enables reduction of volatility because it allows you to assess a fixed income product, a stock, how that particular security or that business is ready to weather difficult times. So it's a risk mitigation tool, risk assessment. So if you have a business that has fully integrated at a strategic level ESG, you have a more resilient business. A more resilient business means lower risk, and lower risk will always attract lower returns because you're putting less at risk. So I think many in the system love using ESG as a lower returns, but actually let's look at the opportunity. Is lower risk because this business is more resilient. And then the perfect example that we love to go to is the oil and gas sector versus renewable space. And of course, a highly risk upstream business could generate anywhere between 15, 18 IRR. And if you were to compare it before COVID to cleaner energy businesses, they were anywhere between 7, 8, 10%. So there is a difference. But of course, because you're dealing with a highly regulated sector, your risks are much lower. So your ability to take at times a lower return is acceptable because your set of risks are lower. So I believe we're saying the same thing, but I do feel very strong about the risk aspects that ESG manage when fully integrated into a business. I hope that makes sense.
Yeah, definitely. Thank you. And Emma, what's your view on the role of investors?
Well, I fully agree with Richard and May. I mean, businesses that serve all stakeholders and operate responsibly and ethically are going to be more resilient. I mean, all the stats that they've just shared confirm that. And I think, I mean, the world has changed. It's not just sort of investors as the people who are providing the funds to those investors. If you just look at what's happened during COVID-19 with the sort of celebrities have become so much less important, and key workers, you know, are the new celebrity. And I think the whole way that we're looking at life and what's important has changed. So when investors are looking at the business, looking at companies that are only there just to make short-term profits and not sustainable. So what the difficult decisions that businesses have been making during the COVID-19 period have been, if they've been looking through the lens of what is their purpose, what is their corporate purpose, what are their values, then they will probably say, well, we will forego some of the short-term profit because it's in the best interest of our stakeholders, all our stakeholders, over the medium to long term. Those businesses are going to be around much longer, you know, the pressure that will be on businesses as we come out of COVID-19. So if you just take a sort of clothing manufacturer, if they suddenly think, well, I'm going to grab some more margin by sourcing things from unethical sources, and they get exposed for doing that, they're going to lose much more than they gain, you know, from investors selling the stock and consumers walking away. So I do think that that investors are increasingly agitating for change because it's the right thing to do. It's the right thing for the investors, but it's also the right thing for society, and it's all now working. It's a perfect ecosystem now, whereas they used to be just, everything used to happen in silos, and I think now everything is much more joined up, and as a result, that's why you're getting the ESG funds and so on performing so much better.
And Adam, what's your view on the role of investors as stewards of capital and agitators for change?
Certainly, I think they have a role to play, and you know, my kind of learned friends have touched on much of that. I think I just wanted to touch on the idea of short-termism. I mean, I think that's really the problem here, is this kind of, I mean, you know, in common parlance, we'd say someone's out to make a fast buck. You know, we denigrate that way of thinking, and yet somehow that's seen as a sort of a fair enough way to operate by some investors. And I don't think, you know, there's a bit of cognitive dissonance there for me. We need to kind of address as a society. I certainly think, as Emma was hinting, the problems with that short-termism are effectively you're putting the shareholders first and everyone else second. And to bring back that point about social dividends, you're not creating one. You know, you're focusing only on the financial dividend, and there are lots of capitals at stake. You know, natural capital, social capital, and so on. And that mindset that focuses on the short term is saying only financial capital matters, and we're going to take as much of this flow as we can and put it in our back pockets and move away as quickly as possible, regardless of the impact on those other captures, on people and planet, effectively. So I think that short-term thinking definitely has to go. I think, you know, there is an argument that says that sort of shareholder primacy is the sort of source code error of modern day capitalism. And I think investors have a significant role to play in acknowledging that and taking that longer term view. So I think other points about, you know, you don't have to accept a low return, I think have already been made. I think that's the future of business and investing.
Thank you. And so the final question from our side, and we'll possibly have to keep the answers fairly short on this, I'm afraid, given the time, because we need to give time for the questions from the floor. But I mean, what's the role of governments in all of this? I mean, obviously the UK made quite a lot of capital out of the fact that it was the first major economy to declare it would be net zero by 2050. But, you know, as we look at the world post-COVID and post-Brexit and all the rest of it, you know, is that enough? Is that going to be enough to shift the dial as a nation? I wondered, May, if I can put that to you first.
Are we doing enough? So performance in my mind is always relative. I think we're doing enough relative to some, but not enough relative to others. Short.
Perfect, thank you. And Emma, I was going to ask you the same.
As always, the devil will be in the detail, and I think that business needs to know exactly how the government plans to deliver this pledge. So I think it is achievable, but it's going to be setting out the exact details of that roadmap.
Adam, what's your view?
Yeah, I don't think it's quite enough what we're seeing so far. I mean, there was a challenge just yesterday that some of the COVID recovery plans are unlawful. Plan B, the NGO, is threatening to take the government to court over that. In the same way that the expansion at Heathrow was shown to be inconsistent with plans to reach net zero by 2050. Or if we look across the water in France, where Macron has just pledged 15 billion euros in the next 2 years, based on a sort of citizens panel recommendations to tackle climate change. We're not seeing that sort of leadership here. Or we look across to Scotland even, or Iceland and Norway, New Zealand, the so-called SIN countries, where well-being of the people is put as the sort of goal of the economic system. I mean, we're some way from that kind of thinking here in England and most of the UK. So yes, I think there's much more to be done.
Richard, can I ask your view?
Yes, look, I mean, it was a great thing for the government to do, to actually set a net zero target. I mean, we have to remember, I think it was going back to possibly the Blair government when the first decision to reduce by 80% by 2050 was set. But a target isn't enough. I think the recent statements by the Chancellor, whilst welcome, the numbers, as Adam has pointed out, are just fail to live up to the rhetoric of, you know, aren't we wonderful? We're going to head towards a green recovery. I mean, the words are great. The figures stink, frankly. I remember the old days of my early banking training, where you had a bounce check where words and figures differed. So the words are very positive, but the figures are far too small. And I think what this government has to do, and subsequent governments here, is evidence that the transition pathway towards net zero. We know we need to get to net zero globally. 2050 is probably too late. The science is increasingly telling us that it needs to be before 2050. So, you know, we need to keep looking at this, and I'll be really interested to see how COP26 plays out, because the way we can genuinely tell, I think, what our ambitions are as a country is what NCD we actually make public in the run-up to COP26, what our plan will be as a country.
Well, thank you, that's fantastic. So we'll open the floor to the audience now. We've got an early question submitted from Paul at Fairlife Mark, who asks, If the panel were going to build back better, where on the ESG spectrum would they start, with the E, S or G? I wonder if anyone wants to take that first.
I have quite a strong opinion on that, so maybe I should get it out there. I don't think we have that luxury of choosing. I think climate change is clearly an issue which has a lot of primacy and needs to be addressed. We know pollution in other forms has got to be addressed. We know the loss of biodiversity is a major issue. There are a whole host of societal, social issues that need to be addressed. And therefore, I don't think we can make those choices. I mean, the Sustainable Development Goals set out 17 goals. It's not an a la carte menu. We can't just do one or two of them. We have to actually deliver them all. And the way in which we do that, 17 is about partnership. It's about governance. So I really think that we need to look broadly at some of the environmental and social crises that we are facing and will increasingly face, and we need to find coherent pathways to address all of those issues.
Does anyone else like to add something? Move on to the next question.
Well, I just wanted to reiterate the point about a vision. I mean, I think we need a vision of what it is to live well within the limits of the planet, and then you backcast from that vision. And as Richard said, you create the transition pathway from here to there. But you've got to have that vision. You've got to have an idea of what good looks like, and it is a blend inevitably of social and environmental considerations. We can't fall short on social foundations and overshoot planetary boundaries to use Kate Raworth's donut economics model. We need to do all of that. We need to live within that donut ring, that safe and just space for humanity. And so, yes, it's complicated, but it definitely starts with working out where you want to get to and working back from there.
Actually, Adam, it was interesting that I believe Amsterdam as a city are going to use the donut model as a framework for thinking through their post-COVID recovery, which for me is a great way of looking at it.
Okay, perfect. We've got another question now from Heather Buchanan, who says, do we need to expand the definition of fiduciary duty in the Companies Act to include social and environmental considerations? I wonder if anyone would like to start with that.
This is probably the wrong crowd for that. I think we would all agree that it would be extremely beneficial for everyone if we headed that way. I would.
It seems odd to me that we're even having that discussion because if you 10, 15 years ago, we were debating whether it needed to be included. I think the analysis now indicates that if you do not include it, you're probably in breach of your fiduciary duty because you're not potentially taking in factors that are relevant and material in decision making. So it seems crazy that we're still having this discussion, but I agree it would be incredibly helpful if they did do that, because there are still some people out there who genuinely believe that ESG is somehow a cost and a trade-off, which clearly it isn't.
I agree.
It probably comes as no surprise to those of you who know the B Corp movement at all to know that collectively we're actively lobbying for that change to happen in the legislation.
So we've got another question here. It could be argued that many businesses are still some way from being truly purpose-driven ethical entities. Can we expect that see more firms being called out for greenwash, ethical washing, or being targeted by activists and protesters for over-promising and under-delivering?
Yes is the short answer.
It's happening.
It's happening, yeah.
Yeah, it's happening, and I don't think it's just not just the activists and protesters who are doing it. I mean, it's it's all the stakeholders who are now highlighting when people are not doing things right.
It's the death of distance. I mean, you know, you can have supply chains on the other side of the world, but a news story can be out here almost instantaneously if something is going wrong in your supply chain. So I think it's very difficult for unethical businesses to hide, or businesses that do things incorrectly to hide.
I mean, the Boohoo example today and today's papers, I mean, where the chair's saying, "Oh, I had no idea," is, that's unacceptable now for people. I mean, everything has to be measured, and that whole supply chain piece monitored really carefully. So I think changes here, it's happening.
You could even argue it's an example of willful blindness. I mean, frankly, the model's pretty straightforward. It doesn't take a rocket scientist to work out that if you're selling things super cheap, someone somewhere is being exploited. And frankly, as chairman of the board, should have been able to spot that one a mile off.
So, I mean, one thing, Adam, I know we've talked about in the past. I mean, do you think that business needs or capitalism as a structure is fit for purpose within all of this, or do you think we need a slightly more radical systemic change in the way that businesses think of themselves and operate?
Well, I think as we do need some systemic change. I mean, I think I was proudly found my daughter on the climate strike standing on the Burghers of Calais statue in Victoria Embankment Gardens one day, being interviewed. I didn't even know, I just knew she was there somewhere, and I think they hold that banner, right? System change, not climate change, and that's what people want. We have to recognise that we are, to requote Kate Raworth, we are falling short on meeting those social foundations while simultaneously overshooting planetary boundaries. It's a pretty bad situation, and so something needs to change. And I think business has to operate in a different way. I'm not suggesting that capitalism has not done good things, but it's done it at a cost, right? I think that's the point. It's done it at a cost to people and planet, and it's lifted billions of people out of poverty, but at a cost. And it's that those kind of internalizing those costs, as the economists would call it, that we need to be doing more of. And I certainly think the B Corp framework, with its focus on governance and workers and community and environment as well as customers, is the sort of model, the sort of framework that businesses can use to kind of right themselves and, if you like, steer us towards a better, fairer form of capitalism.
I suppose we have to recognise that the shareholder-led capitalism is actually a relatively recent phenomenon. I mean, we're talking decades in the history of capitalism. There are plenty of examples from the past where companies actually had a very altruistic role within the societies and communities in which they operated. And in the UK, you think of Cadbury's, Krupp's was the same in Germany. I mean, there are many companies whose origins were in a form of sort of social market capitalism. So whereas it's the Chicago economics, I guess, of the last few decades that's led us to this belief that the purpose of business is just generating profit. And I agree with Adam. I think, looking holistically at how businesses impact the society and the environment in which they operate is a critical thing that businesses have to do. One, because they need to understand the dependencies that they have on social and human capital and natural capital. And then, if they can find a way of actually positively generating profit with a purpose in that space, then it becomes a very, very resilient business. I mean, it's what we try to do at Earth Capital. We try to identify businesses that do have that sort of net positive impact across all the capitals.
Well, if one thing's been shown during this period that we've been going through the last 4 months or so, it is that we are now able to think differently, sort of permission to think differently. So I do hope that we'll emerge from this with people just, thinking about the best way of doing things rather than just the way they've always done it, and realizing that the world doesn't fall to pieces when they do things better and differently.
And in the past, we had particular groups gaining or raising awareness, but here in the last 4 or 5 months, we had the entire planet. We all got touched one way or another. So that's where I really feel that, you know, back to the questions that you raised, Andrew, this is really going to be that year that we will remember as the catalyst to everything that is to come, because it's impacting regulation, it's impacting societal pressure. Generation Z, they were our interns in 2019. We got the first interns that were Generation Z. Millennials are having babies. We have the investors, we have coalitions, we have the North, the South, East, West. So I really feel optimistic about all those elements coming together to build that vision that Adam was talking about, and feel even more optimistic of us building the roadmap. I really do.
Yeah, nothing like a global pandemic to help us realize we're all interconnected.
Yeah. Thank you. Sadly, that's all we've got time for, but I'd just like to say a huge thank you to all our panelists for a really, really interesting discussion, and also a massive thank you to everybody in the audience who's tuned in. I guess the final words from me is, when we look at corporate purpose and reputational risk, I mean, in the short term, COVID is dominating pretty much everything, but in terms of the, you know, there is no greater risk to reputation than you know, ESG and conscious capitalism. It's something that you cannot ignore, and any business that doesn't have corporate strategy as a corporate purpose, a social purpose as a core component of its strategy is going to lose its mandate to operate. I guess the only other point I'd make is that if we've learned anything from COVID, it is that society is stronger than we ever imagined possible, and it will act to protect the common good. So I think my final joyful message to everyone is we are all being watched, and the time to act is now. So many thanks to all our panelists, and farewell.